Hi everyone, I wanted to give you a short update because of the recent price action here on the chart while traveling in South Africa. So in this video, we're going to cover the bullish and bearish Elliott wave scenarios on a daily time frame and also have a look at the local structure. On a daily time frame, the bullish scenario here is what I have on the chart. Finished a three-wave structure to the downside, ABC, followed by a leading diagonal to the upside, a five-wave structure in a green wave 1, followed by 2 and continuation up in a wave 3. In this scenario, preferably your low of 4 is in. Wave 4 in a diagonal should be a zigzag family structure, so either a 5-3-5 simple zigzag or a WXY structure. But if this here is a wave W, so a finished ABC labeled as W, this here is a wave X and you still look for a wave Y to the downside to take out this low, then your wave X here retraced very, very high. Your wave X retraced above the 0.7 Fibonacci taken from the start to the low over here, from the high of 3 to the current low of 4, but that's then labeled your W. You can see that price has passed the 0.7, significantly reducing the probabilities for a WXY, a double zigzag here. So preferably in this scenario, your low of 4 is in, but it is only really confirmed if you take out this high. But then again, the probabilities would be on the side for 4 to be in this particular case, and you look for 5, and the wave 5 has to take the high of your 3. Invalidation for 5 is 72.8k because a wave 5 is not allowed to be longer than your wave 3. So this one-to-one trend-based fib extension is taken from the start to the end of 3 to the end of wave 4. We do also have some resistance to the upside. There's a couple of boxes here, and you can see there's a blue box 68.1 to 68.4k. If we then look at even more bullish scenario, actually, we have here a finished WX and then a triangle structure in a wave Y. Now, a triangle in Y, not all too common, right? Most common for Y would be a zigzag or a flat structure, but a triangle is a potential structure inside a wave Y and can potentially be counted here. In this scenario, we then have our wave 1 followed by a 3-wave 2. Wave 2 hit the 786 Fibonacci, taken from the low to the high of 1, which is a common target for 2, so there's no problem there. And after wave 2, we are then looking for wave 3 towards the upside. Minimum target really would be 73.5k, the 1.618 trend-based fib extension taken from the low of 1, high of 1, low of 2. However, if we do look at the structure here towards the upside, inside a wave 3, you want to see an impulsive structure. So you want to count a 1, 2, 3, 4, and then a wave 5, which means this range over here that we had before the pump up has to be counted as a wave 2. And that is a little bit tricky. Now, of course, it has potential, but it retraced incredibly shallow. So the common target for a wave 2 is the 05786 down here. And you can see that this range did not even retrace to the 382, which is actually very rare for a wave 2. It's not an invalidation, but it's all probabilities, and it's very rare for a wave 2 to retrace this shallow. It is arguably more common for wave Bs compared to wave 2s. Right? In both cases, of course, you then look for upside in either a C or 3, but it is something that we have to keep in mind. This retracement here, very, very shallow, not common for a wave 2, very locally. But of course, local structures are most important, and I will explain the probabilities at the end, right? So we, in this particular scenario, look for a continuation to the upside. And then we have the bearish scenario. Bearish scenario is that all of this is still part of a bigger corrective structure in either a WXY or WXYXZ. Doesn't really matter because you're mainly focused on what's happening here. And because of the local move to the upside, we're looking for a flat in wave Y. So either you have a 3-wave A, you look for a 3-wave B, and then a 5-wave C. Inside B, we then have a WXY double zigzag. So we then have over here our W, X, and then look for a wave Y to the upside. It looks better than counting this as a single A, B, C, but that would be an alternative. By all means, you just want to see this high taken. So you want to see either W, X, Y. Wave Y has to finish above wave W, or of course, like I mentioned, you have the alternative being an A, B, C, and you also want to take out that high, right? And that is the directional bias. So if we look at the time frame, the daily bullish scenario, you want to see this high taken for your wave 5 in a finished triangle in Y and 1, 2, 3 bullish scenario. You obviously want to see that high taken before, or at least take out this high and not change the market structure, take out the previous range. And even in a bearish scenario, you actually want to take out this high, because if this is A, B, C, you want to take out this high. And if you put your wave A at the low over here, so then this becomes your X, and I have 3 wave A, you look for 3 wave B, 5 wave C. For a flat structure, 3, 3, 5, it is most common that your wave B takes the high of your A, the start of your A in this case. So because it is most common for a wave B to take the start, the origin of your wave A, you actually also in even a bearish scenario would like to take out that high. Now I do realize that on Bybit we actually did take out this high, but on most of the other charts we didn't. So therefore I am not really looking at, oh, we already took the high, only because one chart did, and maybe there's some other random chart that did. But on most of the platforms that I have in my list, we didn't. Now, if you then look at the local, let's first look at the local stuff here. So it's a little bit less organized because I have to be quite quick because I have a meeting coming up and I gotta go. But I just wanted to make this video for you. So locally here, we then have either the ABC or the 1, 2, 3, right? So the impulse versus the ABC with the very shallow retracement in B2, which arguably is more common for a B compared to a 2 because it's so rare for a wave 2 that this happens. So the probabilities would be on the side of a B in that case. And actually we had it here as well. I mean, there's no retracement here. Price just moved up, nothing. So in this case, right, what we're going to be looking for is the difference between a finish C or looking for a wave 4, right? Because we are comparing an impulse in 1, 2, 3 with a ABC, right? So a bearish structure would be ABC, and after that you move down again, impulsive structure 1, 2, 3, 4, 5, correction, you look for upside. So the main difference between the two is time and the 618. So the 618 is taken from the low to the current high that we have and is an invalidation for a wave 4. So if price moves down, hits the 618, a wave 4 is invalidated, impulse to the upside 1, 2, 3, 4, 5 is invalidated. Your only bullish alternative would then be 1, 2, 1, 2, too early to talk, and generally if you hit the 0.618 the probabilities would be higher for an ABC compared to a double 1, 2. And secondly, I mentioned time, so this is an invalidation for 4. Second time, wave 4 is most commonly longer in time than your wave 2. However, if I take a fib time from the start of 2 to the end of 2 to, it doesn't really matter. I can take this pivot over here. You can see we didn't yet pass the 1 to 1. I can take, of course, the highs here. Also didn't pass this fib time 1 to 1, which basically means that so far this range here is shorter in time than 2. So in other words, if we are looking for a wave 4, and then another 5, we actually first want to see a range that is similar in size compared to 2 and then make one more high. If price would just move to the upside here right now, then preferably all of this is still considered wave 3 and you're still waiting for a wave 4. And in that case, your 618 is taken then from the low to wherever the high is going to be. Right. So only if price can at least get close, if not past the amount of time of 2, so a sideways range that is longer in time than 2 preferably, or at least the same time would be nice, that is when we can start to consider wave 4s, right? But by all means, the 618 is an invalidation for your impulse. Now on the 15-minute time frame, we have the potential of an impulse to the downside here with a 1, 2, 3, 4, a 5-wave structure. I literally looked at this for a few seconds and just put it on the chart because I at least want to talk about this. So this move down can be either a wave A, a wave 1, or a wave C. right? Wave C would be bullish because then you have 3 wave A, 3 wave B, 5 wave C. That's a flat structure, and therefore the high is a B, which means probability is highest to take the high locally, right? Now, of course, a flat ABC can be part of a bigger structure, WXY, which would be nice to extend a range in time for then a bigger 4 and then a 5. But we have to wait and see if we get that like sideways price action. But also a 5 wave move down at least opens the door for A, B, C, or 1, 2, 3. So you just got to be aware. When you get a structure like this to the downside, it's not all too easy to be, oh, this is bullish or this is bearish, right? The move here to the upside, the retracement, that is what is going to decide bullish and bearish probabilities locally, very, very locally here on a 15-minute time frame, right? So we got to wait a little bit on what price is going to show us, and on a 15-minute time frame from a CVD perspective, don't believe there's a lot going on while my chart is attempting to load here. So yeah, price moving up. Maybe a little bit of bearish CVD here, but it's very local, very, very young still, this range. No bullish CVDs, not really any bearish CVDs besides very, very locally here. So not too much going on. News, we do have some news Thursday, 2:30, Friday as well, 2:30. So make sure you trade safe because it can increase the probabilities. And then here we are at the volatility, and if we then look at the probabilities, then the probabilities here are as follows. So it's a little bit of a story, but hear me out. So as price, right, I'm trying to get this on my chart nicely without putting it in front of the candle. So as price retraced so high, so moved to the upside, so this moved down and then the retracement back up. As price retraced so high, almost taking out this high over here, and of course also touched the 886. If you take an 886 from the high to the low, price here touched the 886. The probabilities are there for price to take out this high. Because if you compare the different daily scenarios, then here in a diagonal, preferably, your wave 4 is in. Wave 4s have to be zigzag family structures, and the only alternative you now have is a WXY double zigzag, but X moved above the 0.7, lowering probability. So in this scenario, preferably 4 is in, you move up for 5. In other words, take the high of 3, right? In the more bullish scenario, you're looking for 1, 2, 3. So here you look for wave 3, right? Continuation, high to be taken. Either continue as an impulse or 1 to 1, 2 continuation. But also in this scenario, you look for the high to be taken. So that is the confluence. And then even in the bearish scenario, you also preferably take out this high. If wave A is at this lower pivot over here, right? Then your wave B, this is your A, B becomes a WXY or ABC alternatively, but by all means, you want to take out this high because your wave Y needs to take W or your wave C needs to take A in this case. So in both of those cases, you actually want price to take out this local high here. And if you put A on the right higher pivot over here, then the most common target for B is above the origin of your A, so also above the high. Now, personally, looking at the structure to the upside here, I'm not yet a great fan of an impulse to the upside here due to the very, very shallow retracement we have here, right, of this previous range, which is incredibly rare for a wave 2, right? A wave 2 not hitting the 382 as a minimum, the 05786 common target, very, very rare. So I'm definitely keeping an eye on an ABC to the upside here, ABC, which arguably has better probabilities because of the shallow retracement here, which could fit with the bigger diagonal as well. But of course, we need to take out this high. An ABC to the upside, however, would be more bearish because after an ABC is finished, you expect a deeper retracement. And in that case, we of course look for local good signs of weakness. Now, that being said, I will finish with putting all the levels on my chart so you know what's going on around price. We hit some resistance, by the way. So if you want, you can put this on your chart, of course. And then over here, the resistance on the chart that we've hit. Above us, I mentioned this blue box, right? And below us, I didn't really add new boxes, but this area would be the first area of support, of course, with the weekly naked point of control always interesting at 62,250. So yeah, that being said, I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.